Hi, Major Berman with the Mortgage News Network. We're here in Atlantic City at the Regional Conference of MBAs. I got Peter Boockvar, who's just out of his session. He's the editor of the Book Report and co-chief investment officer for Bookmark Advisors. Peter, thank you for taking the time out to meet with us.
Thanks for having me on.
So listen, you're only here back in October talking to us about what was going on then, and it's amazing. Both you and Barry Habib made some predictions. Many of them were right on the money, especially in terms of rates. Talk a little about what you guys said back then and how on the money you guys were.
Well, back in October, we had started to see a rise in interest rates from the plunge in July after the Brits voted to leave the EU. We saw a global collapse in interest rates. And then we started to see Japanese interest rates start to rise as the Bank of Japan wanted a steeper yield curve. We saw hints that the ECB also wanted a steeper yield curve because the collapse in interest rates were hurting the banking systems. So there was this trend higher in rates going into the election, and then the Trump victory just set a fire on the further rise in interest rates because everyone got excited about the potential stimulus of tax reform, regulatory relief that led to a further rise in interest rates and about 120 basis point increase from the July lows through November, December highs.
Yeah. So staying on actually the Trump topic, what impact could Trump's tax policies have on housing and rates?
It's all about the growth influence a potential tax reform and regulatory relief will have on the economy. We're stuck in this 2% range. They desperately want to break out of it to 2.5% to 3%, which would be great if we did. But there are interest rate consequences, of course, to that. It means the Fed, instead of raising 3 times this year, maybe they raise 4 times this year. Instead of the 10-year trading in this 230 to 260 range, which it's been in since the election, maybe it breaks out to the 3% range, which will create its own speed bump to that 2.5% to 3% GDP growth that we want to see. So there's the way I describe 2017 is this tailwind of potential fiscal relief and the headwind of tighter monetary policy, not just in the US but globally, and the prospect for much higher interest rates. And how they play off each other will determine how the economy ends up being by year end.
Great. So just to kind of switch topics a little bit, I want to talk about the rising rent and how that's going to impact us in the mortgage business that's focusing on the purchase side of the business. Can you talk a little bit about that?
So obviously post-collapse of the housing market, people were more inclined to rent.
Yeah.
They were singed, I guess, by owning a home and the drop in the price. And that obviously continued all throughout this expansion. You have millennials that are a big portion of the first-time household, and they have a lot of student debt, so they can't come up to 20% down payment, so they're more inclined to rent. We're seeing these persistent price increases of 5, 6, 7% in homes. It's creating more incentive to rent. But at some point, you reach a breaking point when the rental increases are reaching a point where it's really attractive to buy again. And then if you look at low mortgage rates, which we still have notwithstanding the recent increase, that someone's monthly payment on owning a home can be not much different than renting. So I think we're close to, or at least at that level where the buy versus rent is becoming more compelling to actually buy. Now that said, you still have a psychology around post-crash housing market that people are more inclined to rent. They want to be more mobile, I guess, in their life, which renting creates. And we're seeing more multifamily supply that maybe can temper the rise in rents, but then can keep them renting. But again, at some point, the millennials are a very large portion of this first-time household that eventually does want to own a home. And I think that will be a nice demographic demand-side lift to the purchasing versus the rent discussion.
Wonderful. So what's the best way to get a hold of you to connect with you?
So you can email me at Peter at bookmarkadvisors.com, BOOKMARK advisors.com. You can also check out my new website, www.bookreport.com, spelled BOOCK report.com, and see my daily work.
Wonderful. Peter, thank you so much.
Thanks for having me.
Now, Major Berman with the Mortgage News Network. Thank you for watching.
This is Mortgage News Network.